Hey guys, hope you are having a good morning today. Today we will delve deep into Wall Street and what they learned from the Mafia. That's right. A lot of the way in which Wall Street behaves is rooted in the modus operandi which made mafias so successful. This channel has published many videos dissecting the connection between Wall Street and many other institutions, explaining why they are never punished. Now, it's time to look at how Wall Street learned the best scams from the mafias, and why they have been so successful utilizing their methods while retaining innocence under the eyes of the law. These video series took me quite some time to put together, and I ask that you please consider contributing to the channel in any way if you can. If you cannot pledge any support or donation, please consider sharing this video. I want to thank Matt Taibbi once again for his phenomenal work, which this video is inspired and builds upon greatly. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. There will be a day in which we will look back at all that has happened in the stock market and wonder, how does a person even learn to act and behave in such an immoral way? Even being unburdened by a modicum of empathy doesn't come close to excusing, much less explaining, the vitriolic nature by which the biggest reigning American crime syndicate works. And unless you are already invested in all that is currently happening in the markets, you will most likely not grab any interest in knowing about this once the chips lay where they may. I highly doubt any antitrust case against a hedge fund manager filled with antitrust charges will drive mass interest into the situation unless you are involved in it somehow. However, just because the case does not involve a mobster akin to those like Al Capone or Anthony Corallo does not make it any less important. Today we are going to start off looking at 3 defendants in a federal prosecution case that took place a little over 10 years ago. 3 faceless financial executives acted so out of line that federal prosecutors got involved in an investigation which spanned well over a decade. The defendants in the case were Dominic Corallo, Stephen Goldberg and Peter Grimm, who worked in the financial arm of General Electric. Alongside every major bank, including J.P. Morgan Chase, Bank of America, UBS, Lehman Brothers, Bear Stearns, Wachovia, which is now Wells Fargo, and many more, these 3 individuals ran a scheme that would topple any antitrust case in terms of magnitude since the last financial crisis. There were no broken bones, nobody ended up in a landfill, nobody got butchered nor given a beating, like the traditional mafia handbook for how to deal with problems would dictate. Instead, what happened was money simply started disappearing, and lots of it, and so much so that federal prosecutors had to get involved. For a decade, these 3 stooges were ripping off and skimming billions of dollars from coffers in cities and small towns across America. They would secretly collude to rig public bids on municipal bonds, a business that at the time was worth around $3.5 trillion. The 3 would conspire, along with banks, to lower interest rates that towns earned on investments, which in smoother words, means they systematically stole funds for schools, hospitals, libraries and nursing homes from virtually every state, district and territory in the United States. During the trial, we finally got to see exactly just how indistinguishable the methods these 3 Wall Street goons and their co-conspirators utilized were from those that were employed by the Mafia. The Mafias became well known for their manipulation of public bids for garbage collections and construction contracts. In the trial, it was revealed that these Wall Street gangsters invented a code to hide their crimes. They would use phrases like pull a nickel out, or get to the right level, which were coded phrases used to manipulate the interest rates on municipal bonds. Furthermore, the trial also showed that these Wall Street goons not only borrowed ideas from the Mafia, but from the cartels. You see, their co-conspirators were banks, the biggest ones in America which we just named a couple minutes ago, many which are behind the shorting scheme of meme stocks. They understood that in order to be market efficient, they could not just work with one corrupt bank, but they had to work with all of them, all acting in perfect harmony to profit off of funds that belonged to the public. Goldman Sachs was accepting millions of dollars of bribes from others such as J.P. Morgan in order to permit Chase to serve as the sole provider of bad swap deals. Former regulators described this as an open and shut case of anti-competitive behavior. It wasn't until this case came to light that we for the first time in American history saw Wall Street engaging in cartel and mafia type of criminal activities. Furthermore, a deeper look will offer a glimpse at how politicians were also involved in this. The Wall Street gangsters would often bribe politicians to look away by offering Super Bowl tickets and even envelopes with good money so that they would not be confronted as they would perform raids on public money. The crimes that took place did not yield satisfying results. Though all three of these gangsters were convicted, the convictions themselves were minor and led to much resentment to those that were following the case. However, that does not mean that what took place should be ignored, because it is as close a blueprint to understand what is happening between all these brokers, market makers and other institutions taking part in kicking the can of MOAS down the road. Everything we have discussed so far was a bit of an overview, but I want to narrow in on exactly how things panned out in this trial, to really provide full insight into how the system works so that you can set expectations right. Let's truly begin in the courtroom, since we know why these three clowns were being tried for already. It was quite a bizarre view watching it all unfold, since the proceeding did not look like trial at all in the first place. It looked like more like a corporate merger or type of business deal with expensive lawyers all negotiation for what is best for them. That's right, there was no tension nor heat, there was no defense lawyers giving sympathetic gestures to their clients. It was incredibly surreal, literally almost like they were negotiating what was best for every party. As I said, this case did not drive in a lot of public spectators. Instead, the seats of the court were packed by rows of suits, or other lawyers that were keen on observing this long-awaited case since it could have major implications to the law and the way things ran. As reported by Rolling Stones, the only thing that allowed this case to have a modicum of connection to the real world was the fact that there was a jury made up of elder people and minorities. Even the judge, Harold Baer, acknowledged that public opinion was likely to be zero. He told jurors that the media publicity of the case was likely to be small. Now, let's stop for a moment and address the concern. Why did the media show so little interest in reporting this major case? Well, as it will become extremely apparent in a minute, the problem with reporting this type of court proceeding is that there is little interest. The reason for this is that Wall Street's main line of defense for their criminality lies in the extreme complexity of the infrastructure there is within the committed crimes. For the prosecution to win cases, they have to drag Americans into the courtrooms, coach them into understand complex and difficult financial topics, and then convince them that Wall Street violated laws. It is an uphill battle, made all the worse by the lack of general understanding that Americans have in regards to finance. Imagine having to explain to a 70-year-old senior what swaps and CDOs are, and then explain to them how Wall Street acted like a mafia and Carter to rob millions of people. As such, it becomes apparently clear why both the prosecution and defense began their opening statements by apologizing for the convoluted and boring and tedious financial transactions they were about to spend weeks hearing about. Now, let's explain the major crimes the three Wall Street goons were accused of doing. To simplify this, I will use a perfect example already given by Matt Taibbi. Imagine your local town wants to build a new school. In order to do that, they go to Wall Street, which will issue a bond in your town's name to raise a couple $1 million for the school. Once Wall Street raises the money, it dumps it in a tax-exempt account, which your town will use to pay all the parties that will build the school, like the construction workers, the plumbers and everyone in between. But, there is a catch. When towns raise this money, they don't spend it all at once. Construction can sometimes take years to complete, and contractors not all get paid until much later after the original bond is issued. So, the raised money will sit in the town's account, which local official will then go looking for financial managers on Wall Street to invest it for them, and this, ladies and gentlemen, is where the problems begin. So officials will go to Wall Street looking to hire a firm, typically a broker, to set up a public auction and invite banks to compete for the business. For the exact quantity of money you have, say firm number 1 will give you 5% interest, firm 2 will give you 5.50% interest and firm 3 goes higher and offers 5.75% interest. Obviously, you go with firm 3 since it offers the highest amount of return for your investment. The scam begins in Wall Street because they fixed up the fair market system to devise a phony auction. Instead of submitting competitive bids and letting the highest rate win, banks like Chase, JP Morgan, Goldman Sachs and Bank of America instead secretly work together. They decide which company will quote-unquote offer the highest bid, essentially winning the bid for the school. Because of the amount of issued bonds they get, they will typically decide something like Bank of America gets the bid for the school while Goldman Sachs will get the next bid which is for a hospital and so on. The point is that the bidding system is rigged because there is no competition. All the bidders already decided on who will take the bid. You might wonder how this negatively impacts the town school. Well, because banks decided who was going to win, they also decided together what fair price they were going to offer. In a competitive market, a good offer could have been 7% or even higher, but because they all decided to conspire against the school, they all lowball the price as well. The 5.75 rate could have been 7 in a competitive market, but this is America. The way these three stooges rigged the auctions was by bribing the auctioneers. The winning bank of the bid would then provide kickbacks disguised as fees for the deals to the other parties involved. Everyone gets to make money off of this and the school town gets robbed. So, moving away from the example and back to reality, this conspiracy took place for more than a decade, and these three Wall Street stooges and the banks managed to pocket billions of dollars through this scheme. Because of the scale and magnitude of the operation, lowering a bid by just 0.01% would effectively cheat a town out of tens of thousands of dollars. Because bond investments are too complex, something that the system we live in likes because that's how they cheat the system and cover their tracks, it is impossible to know how much the total amount of money they cheated was. However, considering the top 4 banks that took part in the scam, which were UBS, Bank of America, Chase and Wells Fargo, paid $673 million in restitution, a careful calculation would bring the total number well over $16 billion total. The Mafia has always operated very tactfully. Organized crime learned their lessons from John Rockefeller after all, the much larger than Jeff Bezos man whose net worth, adjusted for inflation 2022, would be well over $400 billion. Wall Street learned that it is much more efficient to control a market and boost the price 10% than it is to run a loan sharking business where you have to beat people to collect earnings every week. So they borrowed pages of how mafias operated, then assimilated their very own way of doing business without beating people up, and started racking in profits. Businesses are in the move to become gangsters, the urge to monopolize their sectors far too big. Obviously, in the financial world, they will need an oligopoly to operate successfully, but it's still the same end. Capitalism is slowly being changed for the worse, for it no longer can afford the ambitious hard worker a chance to live the dream. You are either born in the system or get lucky enough in life to do so, and everyone else will be subjected to life slavery where wages can't even pay the cost of rent anymore. Since we are going over the trial as a way to expose the crimes and give you an actual representation of everything that took place, today we are going to focus a bit more on the 3 men we previously mentioned, Corallo, Goldberg and Grimm. The boss of this little group was Dominic Corallo. We know that between the dates of August 19, 1999 and November 2006, these 3 executives took part in the same type of rigged bids that we discussed, conspiring with many brokers in the process as well. We know this for a fact because before the Corallo trial took place, 12 other individuals had already pleaded guilty to a wide ranging of crimes in a federal investigation. We know the government is incredibly laid back when it comes to investigating Wall Street. There is a sense of lack of regulatory oversight for reasons that have to do with the concept of revolving doors, which we have discussed plenty of times in the past. But this case was huge, and many would rightly wonder how did the government make a case against so many scam artists? Well, the answer lies in the complacency that these buffoons had. Hubris is a flaw that can get to even the smartest of men. You see, for years, the trio of defendants were fixing bond auctions and communicated and bragged about it on phone calls to each other using their very own firm phones, which taped the conversations. Defense had an easy time collecting years' worth of evidence just by listening to the conversations they had between each other, where they planned what to do and bragged about their successes. Nobody was whispering or too quiet about the bids, because rigging them was so common that it became habitual, rather than something with a social stigma which causes people to hide it more. As class action attorney Michael Hausfeld said, the tapes illustrated the cavalier attitude which the financial community brought toward this behavior, becoming the predominant mode of transacting business. How long the government was tapping in and spying on the phone calls is unclear, but on November of 2006, federal agents raided the offices of a broker firm that was working with Corallo, Goldberg and Grimm. Because they got caught red-handed, the firm's top executives quickly agreed to turn state's witness. One by one, each of these top executives were led to the stand by prosecutors, who forced them to recount how they were caught up in the raid, had them tell them what they told FBI agents during interviews, and who they plunged into years of crushing negotiations, with all of them pleading guilty. I said we don't know for how long federal agents were spying on these calls, but we know that prosecutors presented and accumulate 570,000 recorded phone conversations all showing evidence of the scam that they were running. A funny thing during the trial to note is that almost every executive involved in the trial was young. I am talking about straight out of college. This is an important subtext to the trial, because it underscores the fact that the bigger executives from bigger banks like Chase or Bank of America were actually allowed to evade testifying during court, which shows exactly just how ridiculous the current system is. The bigger fish are let off with a pass, instead having young folk hung out to the courts. One of the defendants was Doug, who was a broker for CDR. Doug explained that one of the routines they used between each other was by allowing all parties to peek at other bids. Doug testified that the big banks alongside the three men, Corallo, Goldberg and Grimm, would then rig elections by shaving points off their winning bids, and sometimes they would ask each other to submit losing offers to allow another firm to win. Doug also went on to explain that they used guarded language to communicate certain instructions. You see, Doug knew that the firms recorded the conversations, so he would use certain catchphrases that would indicate to the person he was talking to that they needed to intentionally propose a losing bid. The witness testimony from some of the people in the trial was actually pretty sinister. They would talk about how they congratulated each other for literally striking deals with one another, sometimes worth over $200 million, and then taking luxurious trips to Vegas to celebrate, using money that should have been spent on county public services like fixing roads, building hospitals and schools and many other societal needs. These people recounted stories where they were so petty getting angry at each other for not inviting one another to go to certain Vegas trips. Reading through the transcripts was almost like reading through the texts of an angry middle schooler. The reaction from the jury when the prosecution team was making a case once again shows the challenges they have when explaining insanely detailed and complex, and most often boring, concepts to the general population. The jury is described as looking bored, almost like listening to people speak another language they did not understand, and many were caught yawning a couple times after hours of deliberation. These type of cases are not intriguing at all, and when they take literally weeks to put together, you can bet that the minds of jurors are going to shut off. The coded language used by the three men and other brokers and bank members was actually very smart, and listening to the conversations, you would think they were actually pilots describing weather data to each other if you had no context. Jurors had to hear the witnesses giving testimony and then listen to explanation of what they meant. One particular standout was how a CDR broker talk and explain about how he and others apparently renamed Utah so many times using their coded language that it became a bit of an inside joke to them. So coded language and the jurors' bored state of mind aside, this is how the calls went. A provider would conjure up a tentative offer and the broker would then use the fine coded language to guide him into what exact bid they needed to place. The brokers guided them to offer the lowest possible bid in the market, after obtaining other bids by everyone else since, like I said, everyone on Wall Street was involved in rigging up the system. Sometimes, the brokers and providers used different methods. Keep in mind that they had a whole array of different methods they employed. In certain instances, brokers would help the winner by simply excluding other bidders, who sometimes were in on the scam, or sometimes weren't at all. In a particular sequence of events, CDR executive Donnie Naya was telling Steve Goldberg, one of the members of the three main culprits, that he wasn't certain that he would be able to guarantee a win on a bid for a New Jersey hospital bond. There were just too many other companies interested in that particular bond at the time, and they were simply unable to control their bids the way was typically accustomed when dealing with the small amount of usual players. In the recorded conversation, he would disclose and confess and lament to Goldberg how much easier things are for him when they can simply contact other providers and ask them to submit an intentionally losing bid. In other words, he was sad that so many members got involved in that hospital bond because he couldn't control things to his own benefit, something he hated. The conversation sounded almost like he was a mobster in a mafia, the way he phrased his words, showing just how unscrupulous and pathetic these people really are. In other calls, jurors heard dirty deals going down, including ones where discussions about how the brokers were going to be paid back took place. A funny and peculiar thing that came across to me is that these same Wall Street goons actually used famous quotes from mobster movies like Scarface between each other. In Scarface, there is a scene where Tony Montana said there's a pig that don't fly straight. Goldberg, one of the three main culprits, was heard in conversations where such a phrase was used as a coded phrase to signal that he wanted to be paid more on the bribes. Not all the calls used the coded language, some actually were very direct, which allowed jurors to really see how exactly things ran. When I tell you that these people were inspired by mobsters to run their business how they did, I mean it as a literally thing. There is no shortage of evidence that shows Wall Street acting in accordance to how the mafias and cartels do. I guess that is the preferred business method to use when the regulatory oversight is so little that you become full of hubris and decided to run things your own way. With over 570,000 recorded tapes having been submitted as proof, there was really no lack of evidence for the jury to remain neutral. This case offered a lot of detail and insight into the inner workings of how bid rigging works, but it was not the only revelation that came out. The Carallo case provided a first-person view into how political corruption has gotten so rampant that it has become almost the same with the financial world. As discussed, the witnesses were brought up and talked about their role in committing crimes in collaboration with the three defendants, Carallo, Goldberg and Grimm. The defense's cross-examination is what was most shocking of all. The defense counsel spent a lot of time and effort eliciting details about the corruption scheme their clients partake in. These Wall Street lawyers hounded the witnesses about revelations about illegal political campaign contributions they were involved in, including bribery. Defense showed that CDR employees were directed to make political contributions on pre-selected candidates, contributions which would later on be reimbursed. For example, in the court it was explained and proved that CDR hired a consultant named Ron Whiteham who was a bond attorney for the city of Philadelphia as well as the chief fundraiser for then-Mayor John Street. CDR gave White 2 tickets to the 2003 Super Bowl plus a ride on a limo, a gift that was well worth $10,000 at the time. On this luxurious trip, Ron White took with him Corey Kemp, who just happened to be the treasurer for the city of Philadelphia. 16 days later, Corey Kemp awarded CDR a $150,000 contract to advise the city on how to perform swap deals, and this wasn't even the end of it. CDR picked and assigned selected banks to do those swap deals, who in return gave CDR $515,000 for steering the city business their way. That's right, CDR made sure to make a $10,000 investment for a politician turn into hundreds of thousands of dollars worth in profits. To give you a specific figure, this $10,000 bribe to a politician scored CDR $665,000 worth of public money. Corruption at the time was a great business model that brought in $66 per every single dollar you invested in. The current modern figure must be well over 100. But this incident was far from being the most notorious one during the trial. Barack Obama had nominated former New Mexico governor and presidential candidate Bill Richardson as Commerce Secretary. However, a short time after the nomination, Bill Richardson experienced a political catastrophe when he was accused of accepting bribes. Richardson would never see a trial because federal prosecutors never brought a case against the person. An inside source told the AP that the investigation had apparently been killed in Washington, so nothing happened. But now, during the Carallo trial, CDR broker Doug admitted that his boss, Stuart Woolmark, handed him an envelope containing a check for $25,000. This check was made out for none other than Bill Richardson, who upon getting the envelope, told Doug, and I quote, "Tell the big guy the first I'm going to hire you guys." Soon after that, New Mexico hired CDR as its swaps advisor on a $400 million deal. The evidence suggested that Bill Richardson received $100,000 paid by CDR in contributions, getting a total of $1.5 million worth of public money in return. Funny enough, the state had to actually hire another firm to the actual job that needed to be done, since the deal with CDR was quite literally just handing taxpayer money to the firm. CDR did absolutely nothing. Let's quickly make a bit of sense of all this madness. As Taby so expertly explained, the bid rigging scheme works by banks paying middlemen to rig the auctions. These middlemen turn to politicians and bribe them to win business. Then these politicians choose the middlemen to run the auctions, leading right bank to the banks bribing the middlemen to rig the bids. Wall Street is tired and mostly done trying to make money by competitive means and making careful bets on the markets. Instead, they have found that turning to mafia and cartel-like types of running business is more profitable. Imagine paying $10,000 and you automatically make over $600,000, who in their right mind wouldn't do that investment? Wall Street is literally picking money from the public and pocketing it all, sometimes without actually doing the work in return. Exactly like the mafia, Wall Street learned that the best way to make money is to collect a guaranteed tax, which funny enough, the defense team for the defendants actually used as a way to defend their clients. Pay attention to this, because it is absolutely crazy. So, with thousands of tapes, testimonies and relentless evidence against Carallo, Goldberg and Grimm, the defense team knew they had absolutely no way to counter everything stacked up against them. It would be impossible to win the case. Instead, they relied on one of the darkest and smartest tactics I have ever seen. While cross-examining witnesses and evidence, the defense team was working hard to keep hitting the same theme, which was that despite the fact that their defendants rigged bids for a decade, their actions were still fair. You heard that right. They were arguing that their defendants, though acting like a mafia to control and pocket taxpayer money, were still acting fair. You see, the defense lawyers would argue, wasn't it true that cities and towns received the highest bid? If a town would get a 5% return on a $100 million bond instead of 5.4%, isn't that still a good price? In the sickened minds of Wall Street, they genuinely believe anti-competitive behavior scheming to be a legitimate market process that leads to legitimate price discovery. As such, we live in a world where rigging bids is an acceptable system that created fair returns for everyone, or at least this is what the lawyers were arguing. The entire foundation of the legal defense for Carallo, Goldberg and Grimm was centered around the definition of what is actually fair. And now, I want to go over what the most important analogy is, what the real purpose of me making this video is. I want to give you to close off your eyes if you can and embody and truly listen to what I am about to say, because it will be the most satisfying answer as to why Wall Street behaves the way they do. One of the defense lawyers made an absolutely eye-opening analogy when explaining to the jury his arrogant point of view. He said, when your refrigerator breaks down, if you are not a mechanic, you are the mercy of a repair person. If he repairs the refrigerator and charges you a fair price, you are likely to call on his again if the stove breaks. In smoother words, he was essentially saying that you should not complain about what the decisions of Wall Street are, because in his eyes, we are too dumb, too inept to understand the way these things work. They get to fix the fridge and set the price they want, or in other words, they get to rig the bond rate, and price it to what they want, and you as a buyer need to get over what you think is a fair and right price and just deal with whatever they lay on you. This analogy fully encapsulates the psychology behind these people, more than anything else. These arrogance of these modern-day aristocrats who run out financial sector exists because, corrupt or not, they built the financial infrastructure of the modern world, and they are introducing the prices they genuinely think is fair for us, even if this is totally out of place, which it is. They live in a bubble that is actually pathological, which is why narcissistic and psychopathic traits in Wall Street run rampant. You have to be so out of touch with reality, living in a delusion, to think that whatever you want to impose on the rest of us is actually what fair is. There is no guiding principle, no real concrete source of origin for anything they do. This is what the case against Carallo, Goldberg and Grimm was. More than bid rigging and mafia and cartel tactics, it was about capitalism. Capitalism, which is a system that determines objective value, and these Wall Street guys, who are the most capitalistic folk in the world, because they don't like objective value, they like made up on impulse value. Capitalism is always worded and explained as competition makes better product for consumers, but the thing is, companies hate competition, and will either cheat to beat the other, or like in this case, work together to take out the rest and establish an oligopoly. This is why capitalism is so fragile and needs strong oversight. I love capitalism, which is why I also think it needs to be protected at all costs, because it can easily work for the few at the expense of the rest. So to conclude the trial, big shout out to the jurors of the case, because they did not like Wall Street's defense. On May 11th, the court handed down convictions for all three defendants, Carallo, Goldberg and Grimm. Grimm and Carallo were sentenced to serve 36 months in prison, and Goldberg was sentenced to serve 48 months in prison. The banks got the typical slap on the wrist fines and were allowed to retain their preeminent positions in the municipal bond market. The few young executives got a verbal reprimand, but nothing serious and nothing changed in America. This sentencing and end of trial showed two things. One is that the court system can work, and even a bored jury can be guided to understanding the corrupt nature of Wall Street, and that the biggest impediment in delivering justice and everlasting change is the fact that sentences are so pathetic and inconsequential. We need stronger oversight, much harsher sentences, not allow big-named executives to decide not to attend the trial and hold them accountable for much more. Wall Street is a mafia and cartel, they operate just like them. You might think of the mafia and cartel as bloody gangs that leave dead bodies everywhere, but Wall Street doesn't like this kind of brutality, mostly because the sentences for this type of crime are actually very serious. Instead, they learned and operate just like cartels and mafias by following the guidebook on how to run their business, cheat others, in this case the American public, out of money, and avoid the law. And with that, we finalize and end this long video. I truly hope to have inspired some wrinkled. Let me know what you think in the comments down below. Big shout out to Matt Taibbi for his amazing work. I would urge you to please consider donating to the channel if you like the content. I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day, enjoy the rest of your weekend and go to the movies. Until then, keep on buying the dip and to the moon.